Good morning, it's Monday the 28th of November and welcome to Atlantic Capital Markets' regular roundup of the key economic highlights coming up over the coming week. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the Australian retail sales numbers. On Tuesday, we'll hear the Eurozone consumer confidence figures, inflation in Germany, GDP in Canada, and the consumer confidence in the US. On Wednesday, we'll get an update on inflation in the Eurozone, and that's something we'll discuss in more detail afterwards. Also on Wednesday, we'll hear Q3 GDP over in the US, and of course US Fed Jerome Powell's speech. Thursday's a big day for manufacturing PMIs, with news from the UK, Eurozone and the US, and also from China, which we'll specifically look at in more detail afterwards. Likewise, we'll discuss the Fed's preferred inflation indicator, the Core PCE. And finally on Thursday, the latest ISM Manufacturing numbers. It's non-farm payroll day again in the US on Friday, which we'll give our thoughts on afterwards, and we'll also hear the latest jobs data from Canada. And the companies that we'll hear trading updates from this week start today with Pinduoduo. Tuesday sees the release of full-year results from easyJet and West End property owner Shaftesbury, both of which we'll discuss in more detail afterwards. Also on Tuesday, results from Wise and Workday. Wednesday sees Q3 results from Bellwether, Salesforce and Chinese EV manufacturer Xpeng, both of which we'll give our thoughts on afterwards. Also on Wednesday, results from the Royal Bank of Canada and Pennon Group. And finally on Thursday, we'll hear from Dollar General, Kroger and Marvell. Well, last week was a relatively quiet week due to the US Thanksgiving holiday. But meanwhile, over in China, COVID cases rose to a 6-month high, which has worried investors. Numbers are likely to remain under the spotlight amidst concerns about tighter lockdown restrictions. This week is also a big week for data, with the release of US and Canadian jobs data, the Eurozone inflation, and of course US Core PCE. So let's take a look at this week's biggest stories in more detail. So, after Black Friday comes, of course, today, which is Cyber Monday. Well, according to Adobe Digital Insights, sales on Cyber Monday are forecast to increase by 4.7% year on year. The Black Friday sales data will also start pouring in and could impact US retail stocks. The holiday quarter is also known as the Golden Quarter for in-store and online sales. And these sales events are hoped to provide a much-needed boost amid signs that consumer spending could start to wane. Tuesday brings full-year results from budget airline easyJet, who've already provided clues over what we can expect as the share price trades 33% lower across the year. EBITDA is expected to come in around £665 to £685 million. Meanwhile, headline EBIT will be in the region of £525 to £545 million. And this will be a vast improvement from the losses seen last year as COVID ravaged the aviation industry. Still, easyJet's bottom line is expected to remain in the red, mainly due to high cancellations. The airline has said that it expects capacity to be 30% higher in the coming year, but this will still be only 83% of operating levels ahead of the pandemic. The market considers that easyJet can return to profit in 2023, although the second half of the year is expected to be stronger than the first half. Well, also on Tuesday, Shaftesbury, the owner of properties across Soho, Chinatown and Fitzrovia, are expected to report a significant improvement in full-year results after its first entire summer of trading without COVID restrictions. This has meant that the number of visitors from both home and abroad has risen, and tenants are generating more sales than in 2019. Portfolio valuation weakened in H2 amidst rising interest rates and an uncertain economic outlook. Net property income expected to grow 29% to £83.7 million. EPRA earnings of £36.2 million are expected, and that's up from £13.3 million. The dividend is also expected to recover, rising 40%, but the share price trades down 41% so far this year. On Wednesday, we get an update on inflation in the Eurozone. Well, inflation reached a record 10.6% year-on-year in October and is expected to ease slightly to 10.2% year-on-year in November. With over half the countries in the Eurozone experiencing double-digit inflation, pressure remains on the ECB to keep hiking those interest rates. Some ECB policymakers have started to mention slowing the pace of hikes. Cooler than forecast CPI could of course encourage more policymakers to adopt a less hawkish stance. Chinese EV manufacturer Xpeng, or Xiaopeng as the Chinese pronounce it, report Q3 earnings on Wednesday. The car manufacturer delivered 29,570 vehicles in Q3. That's an increase of 15% from the previous year. There has been a significant drop in output in October as customers of the cheaper models proved to be price sensitive following the price hikes across the industry. Xiaopeng has said it is ready to ramp up production steadily from the start of November. Revenue is expected to rise 12% annually to 6.388 billion RMB. Adjusted loss per share is forecast to widen to $1.69 from 88 cents. Meanwhile, gross margins remain under pressure owing to elevated costs in the high inflation environment. The ADR trades 85% lower this year. And finally on Wednesday, Salesforce also report Q3 earnings. Well, the company is considered a bellwether, providing insight into how business spending is holding up. Wall Street is forecasting revenues will rise 14% in Q3 compared to the same period last year at $7.29 billion, and adjusted EPS will fall 4% to $1.22. And this would mark the fifth straight quarter of lower earnings, but it would also mark the mildest decline yet, which could suggest that the worst has passed. Salesforce, as well as its clients, has been reining in spending, which could result in improved margins. Additional cost-saving measures could also be introduced. Brokers have cut the target price for the stock by around 9% in the past few months. The share price trades 40% lower year to date. Well, the Fed's favoured measure for inflation, Core PCE, will be in focus on Thursday. That's as the market continues to watch for signals that inflation in the US is cooling. While PPI, Core CPI and CPI inflation eased in October, Core PCE is forecast to increase to 5.2% year-on-year. That's up from 5.1%. Could this impact the pricing in of a 0.5% rate hike next month? We'll see. So do keep an eye this week on the US dollar, US indices and of course gold. Thursday also sees the release of the latest manufacturing PMIs in China. Well, with COVID cases in China at a 6-month peak and rising, concerns over tighter lockdown restrictions are unnerving the market. Manufacturing and retail sales data earlier in November highlighted the negative impact that tighter curbs were having on the economy. The Caixin Manufacturing PMI is forecast to fall again in November to 49. That's down from 49.2 in October. Of course, the level 50 separates expansion from contraction. And finally, on Friday, it's non-farm payroll day in the US. Well, the US labour market continues to show resilience despite high inflation and rising interest rates. After 261,000 jobs were created in October, expectations are for a further 200,000 to be created in November. Unemployment, which rose by more than expected to 3.7%, is expected to continue rising to 3.8% in November. Meanwhile, average hourly earnings are forecast to hold steady at 4.7%. A stronger than expected jobs market could see investors temper those dovish pivot bets. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Next, 3i and Severn Trent. And in the FTSE 250, we'll hear from Alliance Trust, AVI Global Trust, Warehouse Wright, Oxford Instruments, 91, CMC Markets, Personal Assets Trust, Telecom Plus, Caledonia Investments, Pets at Home, and last but not least, London Metric Property. So there you have it. It's a busy week for data after the Thanksgiving week last week, and no doubt investors and economists alike will be poring over the latest PMIs, inflation figures, and perhaps most importantly of all, the first reports from the sales madness of Black Friday. Have the retailers managed to prise open the wallets of the consumer, or is the cost of living crisis now still biting hard? Will we be hearing bells of celebration or warning bells from retailers pealing in December? Time will tell. Whatever the outcome, we here at Atlantic Capital Markets will be here ensuring our clients are well protected from that clamour, whichever way it goes. So as always, thanks so much for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates, with of course our expert market analysis and our expert opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.